Have you ever wondered how traders are making money in the crypto market even when the prices are going down? It's called futures trading, and if you've been wondering how to trade futures, then stick around to the end of the video because I'm going to go over what futures trading is, how leverage works, and how you can get started trading futures right now. Before we get started, full disclaimer, trading futures can be very risky. This video is for educational purposes only and is not financial advice. So what is futures trading exactly? Simply put, futures trading is a way to trade cryptocurrencies like Bitcoin or Ethereum without actually owning them. Instead, you're making a decision based on where you think the price will go in the future. For example, if you think the price will go up, you can take a long position to profit from that. If you think the price is going to go down, you can open a short position and take profit from the drop. So then you may ask, well, what's the difference between trading futures and then just buying and holding the asset? Great question, and this is where it gets interesting. When you're trading with futures, you can use something called leverage. Leverage lets you trade with more money than you actually have in your account. For example, with 10x leverage, you can control $1,000 worth of crypto for just $100. This means you can make much larger profits with a much smaller investment, but it also means you can lose your money much faster. Now, you may be thinking this sounds complicated, but I promise it's not. Let me walk you through it. Here on my screen, you'll see the BTC chart, and we're looking at taking long positions on Bitcoin. By the way, I'm using a program that does not require any KYC verification, and you can trade with up to 150x leverage on certain coins. I left a link down below if you want to try, check it out. So once you fund your account and get set up on this platform, you'll notice that there are buy, long, and sell short positions. At the top, you'll notice we can adjust our leverage. It ranges from 1x all the way up to 150x. I do not recommend starting this high. It is very risky and you will lose your money. I recommend starting down at maybe 1x, 2x, maybe 5x, and gradually increasing from there as you become more confident in your trades. Understanding this is important because if the trade goes in the opposite direction you want and your account goes to zero, they will close your positions and liquidate your account and you will lose all of your money. Once we've selected our leverage, we can then select the amount of USDT we would like to use. You can enter up to 100% of your account size. The larger your account, the more Bitcoin that you can buy. At my 100% with my $39.98 USDT account, I can purchase up to $5,000 worth of Bitcoin. To show you this in action, I'm going to use another amazing feature by this program. They have a demo trading account. So I'm going to use the demo account and show you exactly how it works. So I'm going to pump up my leverage here. We're going to enter a long position on Bitcoin and see how it turns out. So immediately once our position is filled, you can see that we have our open position. We can set a take profit order and we can set a stop loss order, which I definitely recommend you get familiar with, especially in futures trading. It's essential to set stop losses. If the price goes against you, it'll immediately get you out of that position so you do not liquidate your account. Another feature here that I like is if you're in a position, you're happy with your profits, or for whatever reason you want to get out of that position, you can close it by clicking this X next to your profit and closing your positions. Once your positions are closed, you can check here in order history and notice that we did make a little bit of profit on that demo order. Now there's two different kinds of futures trading. There's perpetuals and derivatives. Essentially they're the same thing except derivatives have a time limit on their contracts. Some may last a few days, some may last a few months. With perpetuals there are no time limits, so you can hold that contract for as long as possible. This platform that I trade on operates under perpetuals, so there will be no time limit and you can hold that contract for as long as you want. While futures trading can be risky, it can be a great way to get into an asset and hold a substantial amount of a coin with very little capital of your own. The proper analysis, you can make some substantial gains, especially during this bull cycle. But that'll be all for this video, guys. If you do have any questions about this or if there's something I missed, please drop it below in the comments and I'd be happy to help. Thanks for watching.